I'd like to talk to you about the advantages of crowdfunding for investors. Now, the first thing I must stress is that nothing in this video constitutes financial advice. I am simply outlining some of the principles which you can give consideration to, but if you are considering becoming a crowdfunding investor, you must go and take your own independent advice. Now, one of the great things about crowdfunding is that you have an opportunity to find really interesting and innovative entrepreneurs and products, which makes it fantastic fun. Whether you're doing an equity crowdfund or a rewards-based crowdfund, such as you'd find on Kickstarter or Indiegogo, on equity you'd find it on Crowdcube, the companies there are, by their very nature, going to be producing unique and interesting products. And that makes it really, really good fun and very interesting to support these entrepreneurs. Now, of course, these companies are at an early stage. On Kickstarter and Indiegogo, they're typically in prototype, and very often even on the equity fund platforms, they are also very early stage and potentially prototype products. Which means that you do get into the company, you get the opportunity to either acquire equity in the company, or you get the products ahead of time, which means you get them at either a lower valuation or you get them at a lower price than the retail price would follow. Of course, if you're actually investing in these businesses, or indeed going to the rewards programs, you do suffer from higher risk, because there's a risk that the companies will fail. There is a risk that the rewards, the products, will not be delivered. But it does enable you to support fantastic early and innovative entrepreneurs, and indeed very often if you're going to a donation site, of course you can support causes, but it may be that there's something in the product which is actually making the world a better place, and therefore you are actually supporting the vision of that entrepreneur if you support their crowdfund. Of course, you may have the opportunity to get some tax advantages from this. Now, I'm not a tax expert, I'm not going to go into this great detail, and it does depend on where the company is and where you are based as to what the tax regimes are. But sometimes investments can have tax benefits. Of course, you can also benefit from the rewards that are offered, and rewards are offered both in the reward type Indiegogo Kickstarter things, but also on equity crowdfunds. You often find rewards as well, and these can make the investment really interesting. They can be very personal. You can be invited along to a party, an event or something like that, or you may get some other tangible benefits which you otherwise would not get if you were just simply buying the product. Of course, you can also invest relatively small amounts. Sometimes it's as little as $1. For equity crowdfunds, maybe the typical minimum is maybe $10 or £10 or something, but nonetheless these are small amounts, so if you have a limited budget you can still participate without too much trouble. And of course, it's a lot simpler. You simply go to the platform and you can make the investment, which makes it, from your point of view, very low cost as well, because normally the transaction fees for any payment processing is actually picked up by the company. It doesn't come out of your investment. So that is also a very good exercise, a very good part of the whole internet based platform, which means the internet is really lowering costs and making it much easier for you to make your investment. Of course, you can also get access to the entrepreneurs. These are very personal campaigns, which means that the entrepreneurs will be very responsive to any approaches you make. And if you're thinking about making quite a large investment, then you might well want to meet them in person, and very often they will respond positively to that, geography allowing, of course. Now, the platforms that do this will conduct some due diligence, but I wouldn't recommend that you rely on it. The fact that due diligence has been done by a third party is a good start, and the fact that maybe some large investors have also done some due diligence is a good start. But do bear in mind that you should be doing your own due diligence and making your own mind up. So I have to end with this risk warning. It's really important that you understand it. Let me read it to you. Investing in small public, listed or private companies involves risks including illiquidity, lack of dividends, loss of investment and dilution, and it could should be done only as part of my diversified portfolio. Sorry, risk warning, just to make it absolutely clear. But there are some of the advantages of crowdfunding from the perspective of an investor.